Here on the Transparent FX Academy, every day I give you my best market breakdowns, showing you how you can be looking to analyze the market both from a technical and in order flow perspective to identify the best trading opportunities in the Forex market. So without further ado, let's jump straight to the charts and see which is today's Forex pair. Into this video, I want to speak about US oil. I got a lot of requests for this breakdown. So without further ado, let's get straight into it. First, I will be covering the technical aspect of this market. Then we will go and see what we have from an order flow perspective by checking the commitment of traders, which is what hedge funds are currently doing in the market. And by the end of the video, by using the combination of these two different types of analysis, we will be able to understand where we have the highest probabilities for a potential trading opportunity in this market. Now, starting here on the monthly time frame, what do we have? Now, here on the monthly, we can see that at the moment, US oil is breaking above a quite strong structure area. In fact, we can see that exactly from this supply zone, the market started all this move to the downside. And currently, the market has just broken above the area with this monthly close here. In fact, last month, we had this close here, which is basically above the previous closes that we had here with the previous monthly candles. Now, if we want to identify that in an even easier way, what we can do is go down on a line chart. Now, when you go on a line chart, what you see is basically the closes in the market. And in this case, we can identify that the previous monthly close was exactly here. And we can see how the market, if we switch back to candles, has broken and closed above the zone, went for a perfect retest with this wick here, exactly of the previous monthly close, because as I just said, closes in the market, specifically monthly closes, are strong structure areas, and obviously the market rejected this previous resistance turn support to the upside. So at the moment on the monthly, everything seems quite bullish. Going down on the weekly time frame, what do we see? Now, here on the weekly, apart from the fact that we had this perfect retest, we can also see that in all this impulse to the upside, there is one candle which is not related to the move, which is exactly this red candle here, meaning that this red candle is a quite strong area of previous resistance, which, now that the market has broken it to the upside, is turned support. So at the moment, we are testing previous resistance turned support and rejecting it already to the upside. So we can expect more continuation to the upside. Now, in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse. And if we do that, we can see how the market has tested its zone that is exactly in between the 0.618 and 0.786 of the Fibonacci taken on this month of this weekly impulse, which is a quite strong confluence of support area from which we definitely expected the market to start this rejection to the upside. So at the moment, weekly looks quite bullish and we can expect more continuation to the upside. Just a quick thing, make sure that you leave a like and subscribe to the channel, and also let me know in the comments the topic for the next video that you will like. Going down on the daily time frame, what do we see? Now here on the daily, we can see that we could easily create here a quite interesting pattern. In fact, we can see how we had moved to the downside, retracement, lower low, and equal high. Now in general, when you have an impulse, correction, lower low, and equal high, what you expect is for the market to provide a move to the downside before the continuation to the upside, basically for the creation of this inverted head and shoulders. And we can also notice here that we had moved to the upside, move down, move back up, and currently it seems like the market is starting this move to the downside, meaning that the market could provide and create this M pattern here. And in general, after the creation of an M pattern, you expect the market to provide a move to the upside to complete the pattern itself at the previous support turned resistance. So there are several indications that this market, after a move to the downside, could easily provide a rejection back up to complete the pattern at this previous support turned resistance. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is what hedge funds and the non-commercials in the market are doing, if we check the data for the CAD, which is correlating quite well with US oil, as you know, we can see that lately net positions have been greatly increasing, going from the 2.4k that we had here all the way up to 46k, with currently 82k longs and 35k shorts from an institutional perspective, with 2.6k longs added with the last report and 4.7k shorts getting closed, meaning that here in US oil, we can definitely expect the market to provide a move to the downside, create this M pattern, and then after that, provide a rejection to the upside, at least for the completion at this previous support and resistance, which is the neckline of this potential M pattern that the market could create, or anyway, for the market to at least try to create this inverted head and shoulders. So how we will be looking for a potential opportunity here on US oil. Now, if the market from here will provide a move to the upside, then in that case, we are not interested, at least at the moment, for an opportunity in the short term. However, if the market will provide a move to the downside, then during the move to the downside, what we will be doing with students is as usual being reactive and not predictive. The monthly, weekly, and daily timeframes, those are the best timeframes from a directional perspective. But when it comes to confirmations and entries, the best timeframes are the 4-hour and the other intraday timeframes. So with students, we will be monitoring price action from a 4-hour perspective and lower waiting for the market to shift from an intraday bearish market, as we will have, to an intraday bullish market. And as soon as the market will shift from an intraday bearish to an intraday bullish market, at that point, we will be adding US oil to our watch list. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a good risk to reward and good probabilities at that point for the move to the upside and for the market to complete the pattern at least at this previous support term resistance. On the other side, important to keep that in mind, if the market will actually successfully, before providing this move to the downside, break above this resistance, then as you know, in the market, all this previous resistance will be turned support here. So in that case, after the break, on the retest of this previous resistance turn support, there is definitely the possibility to be looking for a quite interesting opportunities. And that is what we will be doing with students. So after the break, on the retest inside of here, we will once again be monitoring price action from an intraday perspective. And as soon as the market will shift from an intraday bearish to a bullish market, at that point, once again, we will be adding US oil to our watch list. And we will be looking for a nice longing opportunity for the completion of this impulse correction and impulse pattern to the upside. So as usual, being reactive and not predictive, these are the two different ways in which we will be looking for a potential opportunity on US oil with students. If you enjoyed the video, make sure that you smash that like and comment below. It really does support the creation of more free analysis, education, and updates for all of you. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. First, you learn all the rules of my rule-based strategies. Then you trade the strategies with me. Every day you get the new daily market breakdown showing you how to apply the strategies with the entries, stops, and take profits. And you can also ask questions and get the answer the same day with the Q&A session. So it's a very complete program. I really suggest that you go and check it out. The link is in the description, and I will see you in my next video.